Welcome to The Bottom Line. My name is Benjamin Poole.
Gareth Soloway here to rock your world on this Friday.
So this week we had NVIDIA earnings. Wow, what a sell-off, right? So we had this huge move. It actually popped up pre-market, got up to 128, and then flushed all the way down to 115. That was a huge move.
That was.
So, you know, we were expecting more volatility in the stock market. We were expecting some explosions or something to happen, and then what happened with the volatility?
Nothing. I mean, the markets basically floated up, and then they did sell off a little towards the end of the day, closed flat. But I think the key was everyone was then like, all right, screw NVIDIA, now we're on to the next thing, which was the PCE number today. And then that was a non-event, and now markets are doing their normal late August. Everyone's on vacation, not trading type.
That's right.
So, but we still have great charts to show today.
Oh, heck yeah,
Big
we do.
trades. All right, let's do it.
You go first.
All right, I go first. All right. My first one here, guys, is Dollar General. And I've accumulated a position in this down in this range, right around 86, 87 area. I love this. So number one, we know Dollar General, it's a staple. It's been around forever. The stock is now trading at levels it hasn't seen since 2017. Take a look at the supports down here, right? So we have major supports right in this range and these lows right here. And that, again, gives us major technical levels. Now, the thought process here is you always want to say, okay, the technicals look good. The stock, again, is way off of its highs. I mean, 2023, this was $260. Again, it's a retailer. But what I think is going on here is you have a lot of people that are suffering because of inflation. They're not even able to go to Dollar General anymore. They're trying to figure out, or at least they're not spending as much at Dollar General or Dollar Tree, the other one. Then you have people on the other spectrum where everyone else that has investments are still living large. They're like, hey, man, my 401k is up 20% this year. I'm doing great. I still can go out to eat. I can still spend all this money. And so you have this divergence, right? But eventually what's going to happen is the stock market won't go up forever. And when the stock market stops going up and starts to fade and stays down for a long period of time, then you're going to have a lot of people, as they lose jobs and unemployment goes up, that are going to have to trade down from their higher end retail to kind of the Dollar Tree. And that will fill in that void. So the thought process is twofold. The technicals here, but also on a fundamental basis that, unfortunately, I do think the economy slows down and continues to, and that will end up helping Dollar General at some point in the future. Over to you.
Okay, so I'm going to go over the chart of MongoDB. So it had earnings yesterday, and it had this huge pivot. So you have this pivot high. Whoa, I'm not sure what's happening there. Give me 1 second. All right, I'm going to change back to white. All right, so you have this pivot high right here, and then you have this pivot low. You have this big move up for MongoDB, 16%. And so what you do is, if you're going into earnings and you have this huge spike, you actually look for fib retracements. And so the first fib retracement is a 0.25 fib retracement at 289.96. It got close to that fib level last night on earnings, but then it fell. So what do? You wait for the next day, and so what did it do today? It got right back up into this level and actually dumped out about $6 to $7. And so if you have a big spike, try to use your fib levels. Try to get the 382s, the 50%, the 786s. Those are going to be really good support or resistance levels depending on which direction it's moving from. And so that was a good opportunity. Actually, Dr. B traded it just before that fib level, and he actually got a $4 or $5 pullback off that, and he gave that out for our earnings traders yesterday. So I just wanted to give that to you guys and show you that there are other ways to make trading opportunities inside of earnings. So, yeah.
All right, back over here. Let's rock and roll here. All right, so next chart that we're going to look at is Bitcoin, and Bitcoin is inching down a little bit today. I've talked about this a lot in the game plan and trading the close, but I do want us to continue to follow the key levels. So Bitcoin down just a little bit today. Markets overall are neutral to positive, so you're not really seeing much correlation there, more of just the non-event type action. But I do think that you just have to be fully aware that as long as we stay below this pivot line, the bias remains to the downside. And we're not that far away, to be honest, from this 53,000 level and potentially 49. And we were just talking about this with some members earlier, is that the biggest risk to Bitcoin is not Bitcoin itself, in my opinion. The biggest risk is the stock market. And so again, if the stock market can continue to go up and make new all-time highs, I think that is the main factor that could help propel Bitcoin up. But if the stock market starts to crater again and we start to see this kind of risk-off attitude, people running out of the markets, then at least in the near term, it does push Bitcoin here down to 49, 53,000. The big thing to me is you look on the bigger time frame, right? This line here and this line here, that is what we call a bigger time frame consolidation, right? So from this move up, that's a flag pattern, right? We can draw a little flag, a bunch of stars in here, the line, etc. You guys get the point. But the point being is, again, that this pattern is still net longer term bullish, but you have to hold this lower area. So you can come down here, but you can't confirm below that. If that happens, I hate to say it, but I could see the 30s as being our next target, 39, 37, 35,000. And think about that. That's scary for a lot of Bitcoiners out there. So the key is, let's follow the charts. Let them tell us. Right now, there's no reason to panic. Yeah, it's below the pivot line, but as long as it holds here, it's okay. If we just need to know if it breaks this, that's when real trouble starts. All right.
Okay, so I'm on a fib kick lately. So here's a crazy thing, right?
Is that some workout thing?
No, it's not really. All right, so here's a low pivot on Lululemon. Give me a sec. All right, give me 1 second. Got to take a second for it to freeze. All right, so you got this low pivot right here, this high pivot right here. And so just like the other chart that I showed you on MongoDB, it had already come down to past the 50% retrace. And so if you're looking for a long position on Lululemon, you would actually look for a fib retracement of right around the 786 or the 7.75. And so look at this. Right in this area, right around 240. Let me go to the intraday chart. Look at this. Look at what happened. After the market closed, it got to the 50% retrace. And then let me go to extended trading hours. All right, here we go. Zoom in a little bit for you guys. All right, so look at this, 75 and the 786 fib retracements. So it got right to that level and then it had a huge bounce. And so you guys start using fib levels, correlate those with gap fills and stuff like that, and you guys can make yourselves a ton of money on these earnings.
That's the truth, absolutely. All right, my last chart of the day, I did one stock, I did one Bitcoin crypto, and now we're going to do one on commodities. Now I'm going to take this commodity chart, not the usual suspects of oil or gold or silver. We're going to look at corn. Corn looks to me to be breaking out. The first thing I wanted to show you guys is look at how much corn has declined since 2022. It was up here. It has just gone south constantly, but there's life here, all right? There is life here. If we zoom in on this chart here and we bring this in, look at this little bit of a breakout over the last couple days that has started to occur. So we have this parallel channel. You briefly got above it, but you never confirmed. Here was the high, never closed above that high. Was above here, pulled back here. So it basically, just like Bitcoin, it enables it to fall back down very easily. But now we're breaking up again. I think we're going to end up confirming a breakout here. And the kicker is this. Hedge funds are way over short corn. And the beauty of that is that when they start, even if they don't get short squeezed, just even a few of them covering will push this up likely even more. So I am very, very bullish corn in the near term. The best cure for low prices is low prices. Remember, when price is this low, a lot of farmers are like, I can't make any money planting corn, so they plant less. Well, guess what? Less supply means price goes up as demand stays stable. So again, a lot of these factors look really good for corn. I'll kick it over to you, Ben, for your last one.
All right, so since I'm on the fib kick, here I'm going to give you another fib level. All right, so here is IMX. You have this pivot high, connects here, and you finally broke out. So what I did was I took a pivot from this bottom to this top, and so what I'm looking for is a 786 or an 886 fib retracement. So I'm going to zoom in now on this chart so you guys can see where those levels are. So if you guys are interested in going long on IMX, here is the level that I would give you. So not only do you have this downsloping trend line that you broke above, oh, let me erase those. But if you get down right here, the 75% retrace, right around 1.064 to 0.161, 0.41, this would be a hit of this downsloping trend line. After the breakout, this would be a retrace, and you would have fib levels. So if you're looking, again, to get into this for a long position, that's where I would enter this trade. And then you would just put a stop out at any break below or a daily close below that low, And I think you've got yourself a long trade on IMX.
Awesome, man. Dude, good analysis, right to the point.
Here we go.
Alpha to you guys. That's what we love to do here at Verified Investing. You want to take us out with your normal spiel?
Yeah, thank you guys for tuning in. Please keep in mind that this is for educational purposes only, and we appreciate everything that you guys do, and
That's the bottom line.